We saw the producer price index come out hotter than expected. So you might say, Nick, why on earth is the dollar down if inflation was hot, right? Well, here was why. The producer price index yesterday came in hot, but what was a little confusing was that, yes, it came in hot for the latest data, but they revised the previous number down, okay? So they kind of did a little bit of this. You had hot inflation for the latest, but they revised the previous one to make it look cool. So what you were left with yesterday was some mixed inflation data, some good news, some bad news. So the market kind of reset and it said, oh, initially it popped because inflation looked hot, but then they came back because it was like, oh, well, you know what? Revisions are, it kind of is a non-event. So that's what happened yesterday with the producer price index. I made a tweet about that this morning because I saw so many people, and this is a pet peeve for fundamentalists. 101, if you want to make a fundamentalist really annoyed, if you're somebody who tracks, economic data and you focus on it like we do on these shows, the quickest way to annoy someone like that is to complain that the market is manipulated and fake and, none of it's real and that it doesn't make sense. It actually made really good sense yesterday because, again, the dollar's in a downtrend. So if inflation data didn't save the day for dollar bulls yesterday, it's all on CPI today. If you get a hot print out of the CPI here this morning, then yes, we might see a pop on the dollar. But if you don't see that, you've got just a laundry list of not good news for the dollar bulls. So today is really pedal to the metal for the bulls. It is the last line in the sand, in my opinion, for dollar bullishness. If you are a dollar bull going into this event, you are looking for inflation to come in hotter than expected. The CPI is everything here, okay? Now, it's not just everything for the dollar index. If you're trading currencies, that's important, but it's also very important for the story for gold. It's also important for the NASDAQ. It's important for the S&P 500. And guys, this is just a monumental event because what we've seen recently, I've done this a few times, but let me set the scene for you as we approach the CPI data. Now, there's about 750 of you guys here. If you guys could do me a quick favor and hit the thumbs up button or like the stream wherever you're watching. I believe we're live on Twitter and on YouTube right now. Shout out to everybody who's watching. Thank you for being here. Let's jump into some analysis as we prep. We're 10 minutes away from the biggest number arguably of the month. This one is really, really important. Now, jobs data was huge, but this is really where it all comes down to. So I'm going to walk you through some data really quick. I want to paint a picture for the U.S. economy and give you my perspective of why, at the end of it, we're going to reach the conclusion of why I am personally not telling you to do this. This is my own opinion, as always with my channel. I am long gold, and I feel pretty convicted about gold to the upside. I'm floating a couple winning positions right now. I want to talk about that, but I can't do that unless I give you the full picture. So bear with me here. If you're a regular, then you probably can say all of this line by line with me. GDP numbers, what did they do? They came in lighter than expected. This is the gross domestic product of a country. This is like the simplest way of kind of outlining the economic growth of an economy. And what do we see here? Well, forecasts, your yellow dot on the Edge Finder is your friend here. It's going to show you the forecast for what GDP were expected to be. We've plotted that on the charts for you. Okay, boom. Then what did we get? We got 1.6. So we expected 2.5. We got 1.6. Okay, GDP. We can say confidently there that GDP figures were a little bit disappointing. Okay, so GDP figures disappointing. Let's keep going. You're going to see a trend here pretty quick. The US, we've selected the US for our PMI data. This is the Purchasing Managers Index. It helps us to spot what purchasing managers in the manufacturing or services sector, respectively, are feeling like going forward. This is, in my opinion, one of my favorite indicators because it is a forward-looking economic data point. Okay, it's asking influential people, purchasing managers, are you going to be doing more hiring, more purchasing, etc. in the weeks, months to come? Very important. Okay, so this came in lighter than expected. So again, PMI data for manufacturing came in light. And top it up with services, a large component of the US economy, also came in light. Okay, PMI data, give it an X, because again, cooling in PMI, cooling in GDP, retail sales, we get that data here today as well. So I would go ahead and say this doesn't count yet because this is old data. We get the new data today. It's a big day in the market. So stick around. We'll be covering all of it. Don't go anywhere. Smash the thumbs up button on the stream. Let's get into all of the data today. NFP. Okay, ready? Jobs data came in light. It missed substantially, the first big miss in a while. So jobs data starting to cool. And, you're hopefully seeing the trend here. The economy, unemployment claims jumped. Job openings are on the decline. Okay. Unemployment rate rising. Do you see the trend? Wage growth shrinking. Inflation data is what is up next. That is why today, if you are somebody who is a dollar bull, again, we're losing all of the dollar bullish cases, in my opinion. They're not holding up. The US economy is starting to slow down.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
So I'm not a dollar bear outright unless today we get a cool CPI print. If we get a cool CPI print today, then to me, there's just nothing going for the dollar right now that I can meaningfully hold on to and be confident about it. Okay. So all of this stuff to say, what does all of this point to? The economic data coming in really light, bullish gold. Okay. Now you could do all that manually if you have the edge finder, but why do all of that? We looked through those charts together and I think that was intuitive for you guys, but why do that manually? That's why we have the top setups algorithm. You can see all of the data that we just did together manually. The software automatically is calculating scores based on the data that we have. Okay. We've been in the long side of gold. Things are going really well. I've got 2 trades and I'm trailed into profit on both of them. Nope, on one of them. I have a very small risk on trade number 2 and a very nice profit trailed on trade number 1. So today with inflation figures, this is the final one to fall. If you get the DXY could really tumble if you get cooling economic data. Cooling economic data plus cooling inflation. The only really kind of potential savior to the dollar here today in the short term, in my opinion, is a really red hot CPI print. I'm really focused right now personally on gold. It is something that I've got 2 winning positions on. Let's paint another picture. What about if you're wrong, Nick? What if you look like an idiot in an hour? And gold just drops like a rock. Again, my stop loss is trailed into profit. So today, if the market completely sells off on gold, I'll still make money. I wish I was always in this situation. Sometimes I get it dead wrong, but right now I've been very right on gold. I'm just looking to see if we can get some follow through. So the question is, do we follow through to the upside on gold? Do we head back to retest those all-time highs? And what's going to get us there? Here's the thing. We have cooling economic data. So for the gold story, I like it irregardless of whether or not the inflation comes in hot or cool. Because if it's hot inflation plus cooling economic data, stagflation, I like gold. What about if it's cold, Nick? Well, then they're going to rate cut. And I like that for gold. So I like the story for gold overall. And again, I'm not saying it can't go down dramatically because markets can always do exactly what people don't think they're going to do. But I'm telling you, that is where I am positioned. That is my opinion. That's been my position for the last, few weeks. So we will see how that plays out. All right. And CPI should be coming out here. Stock market jumping here initially. Euro up, pound up, dollar down, gold up. Okay, let's see. That would suggest off of first guesses that was a inline or soft inflation figure. Consumer price index month over month came in 0.3%. Very nice, so lighter than expected. 3.4% year over year came in line with expectations. So again, let's see if there was any revisions here. So previous 0.4, previous 3.5. So it doesn't seem like any revisions on that front. So we got a in line with expectations. This is down from the previous year over year. Inflation is at 3.4%, according to the CPI. Month over month again came down slightly. Let me reiterate what I was pointing out with the dollar index. I don't know the future, right? But at this point, the Edge Finder has pretty much everything going against the dollar in its calculation. We have now softening inflation. We have economic data that is cooling. And now, if from a price action standpoint, if we close like this today, that is spelling not so good news for the dollar index. Gold is jumping on this. Again, nice little break here to the upside. Here's the live P&L. Let's check on gold. So we're up $7,400 on this trade so far. Stops are trailed into profit. What I'd love to see personally to go ahead and trail my stop loss further in would be to see a nice close above this level. If we can get a close above this previous high, then absolutely I will be looking to trail my stop and lock a little bit more in on the gold move. Gold's, in my humble opinion, gold was going to go up either ways today, even if it may not have gone up, per se as much as it's gone now. But my perspective was, even if it dropped, I thought there would be dip buyers that would step in. Again, opinions only. I'm not telling you what you should do with your financial situation. I'm just sharing my opinions as always. Gold, again, up 0.72% on the day. Silver up 1.5%. You got the NASDAQ up 0.7, S&P up 0.6. And again, this is an all-time, very close to an all-time intraday high for the S&P 500. We are just at the 5280 mark now. And again, markets just ripping higher on the celebration that, again, we have strong earnings, but also inflation that seems to be coming in line. To me, it's hard to find a short-term reason to be a seller in this market. It's just got all of the things going for it in the meantime. Doesn't mean something won't come along to be more bearish. But for me, again, I've got a couple positions on the S&P. I'm long gold. I've got some technology ETFs, XLK. Let's see how my technology play is doing. That's looking okay today. Very nice. Take a look at some currencies. Euro USD pushing higher here today. Beautiful. Again, cooling economic data plus cooling inflation out of the US is making the dollar lose a little bit of its steam. S&P 500 here has pushed past the highs, but now giving back a little bit of this. So let's go back through this number for a moment. How is this all forming up? Okay, so you had a CPI number month over month came in a little bit light. The revisions to the previous number, there weren't any, right? So 0.4 came in. Consensus for this one was 0.4. It came in 0.3 month over month. Year over year, what are we looking at? Previous, we had 3.5. Now we have 3.4. What this does, I think, is at least it takes out are we going to get a fourth month in a row of higher than anticipated inflation? That was everything today. So what's exciting here is that we, for the bulls, for people who are, hopeful for rate cuts, for cooling inflation to come in line, for that to play out, this is the first step in the right direction. And not overall, because the overall direction has been up clearly on the S&P 500 because, economic data before the CPI also kind of suggested, hey, things are cooling down, but we needed that confirmation from CPI that you're not getting cool inflation, hot inflation and cooling economic data. So today you get that confirmation, and I think the bulls will probably celebrate that in the short term. Now, what gets us to explode past these highs? The next big event is 7 days away. It's NVIDIA's earnings. So if you're watching indices, that's kind of our next catalyst. But in the meantime, I think we probably have room to continue higher. Unless you see some big rejection today, like if you see, long top wick, then I would be a little cautious. And I'm not a buyer up at these levels personally. But again, I think that in the short term, the market can celebrate and can rally. What I feel a little bit more confident about is gold, right? I'm liking the story for gold better because you're seeing some economic cool down, which is good for gold, incites a little bit of uncertainty about the financial markets going forward. But at the same time, continuing to go higher. Took me a while to figure out how to use the Edge Finder, but had it for a month and it is clutch. I only trade gold. Awesome. Thanks, Mike. Appreciate that. Why is the market celebrating a year-over-year inflation of 3.4%? In my opinion, nothing has changed. Rate cuts from table till September. The reason is because there was doubts, right? The reason you have to think about, a lot of people today were thinking, oh my gosh, inflation is not going anywhere. It's going to, continue to trend up. And we have data. Let's use it. Hold on. Let me pull up the CPI. So if I'm looking at CPI, this was our setup today. Now the latest data hasn't yet updated. It'll be in here pretty soon. We had a couple months here. The blue, by the way, is US. US inflation was trending up. So the fear today was that you were going to see, all those other things that we talked about earlier for like 5-10 minutes, cooling and inflation continuing to go up. So today we didn't get that. Today we got evidence that, okay, inflation, all that stuff is cooling, but so is inflation. Even if it's modest, even if it's mild, last time around we had 3.5%. You can see here, I've hovered over it. 3.5% was the previous read, as we mentioned earlier. We're going to come in today at 3.4%. That's a piece of progress, right? Now the market can say, okay, yes, the economy is cooling, but so is inflation. We're okay with that. What the market absolutely would not have been okay with was economic data coming in light, and at the same time, inflation sticky and problematic, because then people are going to get scared that the Fed would need to rate hike. So it doesn't seem like rate hikes are the next move. We've heard that from Jerome Powell. Even yesterday, he reiterated again that the next move is not a hike, at least in terms of what they currently expect. Can that change? Sure. Can, the Fed get it wrong? Absolutely. We saw in 2020, they got it terribly wrong when they thought inflation was going to be transitory, and ended up being a multi-year campaign now to get it back under control. I just got a text from Frank. You guys know Frank. If you're a regular, Frank said that he doesn't believe the CPI number. I don't know if he's being, it's a text, so you never know through texts. Things can get miscommunicated, but I don't know if he's kidding. But he sends me a text this morning, says, I don't believe the CPI number. So maybe he has just gone, Frank is over in Europe right now. He's away from the office because he's taking a little bit of a vacation with his family. He just sends me that text, and, I don't know if he's being joking or not, but it is kind of a surprising number. Things seem to have been trending up on inflation, but now in line with economic data cooling, we do see inflation coming down. Forward looking, the question is, is this oil price decline actually going to continue to help the inflation story? That's the big question. That being said, with yields dropping here today and economic data coming in light, I very much like where I'm at with gold. Again, I'm not going to make this any more complex than it needs. I've been drawing this over and over. So if you've seen me say this a lot, then I apologize. Let's do some simple analysis. Okay, we're looking at gold. We're doing the fundamentals. The economy out of the US seems to be, it's not crashing. Let me reiterate, it's not this, okay? The economy is cooling, right? So cooling economy plus, at the same time, inflation. What do we have? We have, I'm not going to say it's really cooling fast either. In fact, that would actually be super bullish for gold, because then you're talking about like deflation and terrified fears and all that stuff. What I'm going to say is that we also have very modest cooling in inflation as of late. But this is only as of late. We still have overall still high inflation. Please remember, guys, that this is one print. CPI is important today, don't get me wrong, but it doesn't confirm that we've just entered back into an inflation decline environment. Yes, on a 1 month basis, we've come down a little bit, but remember, that's just 1 month. We have to look at things on a kind of a rolling month basis. I would say you probably need 2 more months of cooling inflation data to really get the market convinced that inflation's coming back down, and then we can see rate cuts. If you're somebody who wants to see rate cuts in September or November or December, what you need to see right now is inflation not just do it one time here, but continue and persist lower over the coming months. You don't want to see a one-off and then a reversal. So my perspective is this. This is kind of the current tradable setup. Inflation's cooling, which I mentioned earlier. That means rate cuts are going to be kind of exciting to the market. So people are going to say, okay, nice. Rate cuts are probably on the way, and they're going to cheer that. At the same time, so this is good for gold. Rate cuts are good for gold. And so that's why I like the story either ways. Now you might have said, but Nick, you said stagflation if the inflation was hot. Yes. But I mentioned also at the beginning of the stream, I was bullish on gold regardless of what happened with the inflation data today. I think that, enough of the economic cool down stuff has already shown up to get me excited about gold. Now, the one thing that I will say is that, we've lost a little bit of the geopolitics for gold. So if you're, somebody who is saying gold is, the risk premium to gold is people pay a little bit of extra money for gold because maybe there's some conflict in the Middle East that they're afraid of, and that could scare the markets. And so maybe gold is a good place to hide out. So that's the full picture. But I think that trade is something that is currently not really front of mind. But at the same time, it's also something that's very inevitably hard to predict. What I have in front of me that I can make a decision on is we have cooling economic data. Again, I'm a broken record, I'm aware. Cooling economic data and inflation data that is suggesting that rate cuts could still be a possibility, perhaps at the end of this year or maybe early 2025. So I like the gold story. So again, I actually added ahead of CPI. Call me crazy, but I doubled my position size on gold on this pullback here. I'm sorry, was that right? No, I added it over here. So I added a second trade. I took my first trade over here. I added a little bit more on the second trade, and we've made a nice move on GLD. Why am I trading GLD? Well, quick plug. If you guys aren't trading with WeBull, it is the brokerage that I use as a US trader. So my US friends, if you are looking to trade options and ETFs and stocks and indices and gold and everything like that, and you're looking for a good broker, I would suggest that you check out WeBull. It's regulated in the United States. It's what I use. Boom, there's the link. Reason I mention this too is I trade ETFs, which that's why, I do my analysis on the spot price of gold because the chart is much cleaner, but then I just execute my positions on GLD, which is an ETF that tracks the performance of gold. So it just moves with it. So again, gold here to me has the all clear, in my opinion, to make a move back up to the previous highs. 2,400 seems like not only a checkpoint, but just a pause before we do break new highs. Now, at the beginning of this year, my target on gold, I think, was like 2280. So I got it really not wrong per se, because I was bullish going into the year, but it kept going a lot further than I thought. So I think a lot of times people think, gold has to correct, it has to come down. Really, I've traded gold for a long time. When it makes its big moves, it is very unidirectional and it's relentless. So I think that perhaps if you see fears about recession creep in, if the economies of the world continue to cool, right? If they start to accelerate to the downside, I love the story for gold. So this is why right now I'm, positioned heavily in gold longs. S&P 500, I do have positions on this. I am long on indices. I also have XLK, which I mentioned earlier. So, I don't hate the idea of staying long indices right now. I just need to be aware, and I'm very much fixated on the acceleration of that economic decline. Is that going to accelerate, or is it going to just kind of steady out? I want to see the economy. If I'm going to stay long stocks, I want to see the economy, slow very, very modestly, but I don't really want to see a ton of decline, because then that means the earning side to stocks will start to struggle. If GDP continues to do another thing like it did, before when I mentioned this, right? GDP, we had a miss on GDP. If you see several misses on GDP, I'm going to get really, really uninterested in staying long stocks, simply because company earnings could take a hit. The market is priced very richly right now. So, to me, the stakes are high to stay long stocks.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.